I hereby introduce to you Mr. Michael Veazey.
Ladies and gentlemen, welcome back to Amazing FBA and British Amazon Sellers. Today we have somebody on the podcast to deal with a very, very important area. It's one of those areas that we tend to stay away from. That is trying to measure profit and loss. I have literally seen an entrepreneur in the Amazon space gets a nosebleed over this topic. That's how stressful it can be. So we need all the help we can get. I'm delighted to welcome Shane Stinemetz from Fetcher. Fetcher is one of the fantastic suite of tools grown by Greg Mercer, who created Jungle Scout and then has gone on to work with other people in various different spaces, and Fetcher deals with the whole profit and loss area. And Shane, as well as running that, has a deep understanding of this, having talked to hundreds, I believe, of FBA sellers, and is also himself a private label seller on Amazon as well. So Shane, you're the man. Thank you for coming to save us.
So much. You're very welcome. Thanks for the invitation and for that kind introduction. You're right. I've now talked to almost 500 FBA sellers. That's face-to-face. That doesn't include in our polling. We poll somewhere like around tens of thousands of customers on a regular basis. But myself personally, I've talked with over 500 FBA sellers. And for me, it's all about understanding the pain points, because Fetcher aims to solve a number of those pain points. And I'm sure we'll get into that today.
Absolutely. Well, like the first question is the whole profit and loss thing. So everyone starts going mad once you throw figures around somehow. So why is it even important to measure figures? It sounds like a dumb question, and it probably is. But let's get it out of the way, because frankly, I go through whole months sometimes without really looking at my figures. Does this make any real difference? If I've set my business up, does it really matter?
Yeah, well, of course, the short answer is yes. But, you know, a helpful storyline from my own experience, when I started selling private label a few years ago, I think I was almost 6 months into selling before I actually realized that I had no grip on my books. You know, I had no idea what was going on from a financial perspective. I was tracking my sales every day. I'd look and see, oh my gosh, I sold another unit, or I sold another 5 units this afternoon. Like, how much fun. But the reality is that like my Amazon costs were spiraling out of control. And I didn't really know what was going on in terms of like kind of long-term storage fees or my return rates. And I guess the answer to your question, Michael, is that you really don't know what you don't know. So if you're not tracking your numbers, you're probably ignorantly moving forward and making business decisions without the data. And we all realize in a data-driven era that we have to make decisions based off of data. So I'd say the number one reason to get control of your books and really understand what your numbers are is because that's going to help you set good goals and set good targets for the future. You'll make better business decisions for the future of your business if you know where you stand today.
Excellent. Well, that makes very, very much sense. And yeah, I'm guiltily aware that, like a lot of other sellers, I'm exactly what you say. We track sales like an addict, and then we just ignore everything else because it's harder to do and less pleasant because it involves costs, i.e. money going out the door. So, tell us a little bit more about that whole question of using data to drive the business. I mean, in theory, we all know it makes a lot of sense. In practice, for some of us, I mean, I know that Greg is an engineer. You obviously have a numbers comfortable background. For some of us, that is a difficult area to get our heads around, and we tend to bury our heads in the sand, or we get over involved in too many numbers and our heads blow up. So what would you say are the important numbers that you need to track? So let's say for somebody just first starting out without a business background.
You're asking about people who don't have a business background, because I mean, even though I did have a business background, having come from Silicon Valley and working in the tech sector, I didn't have a finance background necessarily. So to kind of become an entrepreneur for the first time and have to worry about all of these things on your own is a big challenge. But I've kind of broken it up into 3 buckets. So I'd say there's like 3 primary buckets with metrics that you should be thinking about. And they're going to be pretty self-explanatory, but I still think it's worth going over. So the first bucket is your sales. You know, sales are the lifeblood of your business. So what are the actual sales dollars coming in? It's also helpful to know your units sold. Category of sales, I'd consider your refunds or your return rate. How many refunds are you getting for the number of sales? And then also reimbursements. So that is the money that you're getting back from Amazon, which is something we can talk about in a little bit more detail later on, because I've got a good tip to help people improve their reimbursements and get more money back from Amazon. But that's the sales bucket, okay? So that's the first bucket. Once you've got all that, then you need to take a look at your expenses bucket and see what you're going to deduce. You know, what are you going to have to cut from that sales bucket to find out what you're actually bringing home? So in the expenses section, you know, everybody's going to think about their pay-per-click spending. So if you're spending money on advertisements, you must, of course, consider that. You have all of your Amazon fees, and then Amazon fees really get split out into 2 categories. I think about them in orders fees. So those are transactional fees like FBA fees, the fees that are associated with every single transaction when somebody buys your product. How much does it cost to fulfill the product? And then you have like recurring fees or service fees. So those are storage fees. Those may be labeling fees that Amazon's going to charge you. And those you have a lot more control over. And that's one area where Amazon sellers could do a lot better job getting control of their margins by working on their recurring fees. But nonetheless, you got Amazon fees. Then you've got your cost of goods. So how much did it cost to manufacture your product? Sure. Within the cost of goods sold realm, as I said, there's kind of two main focuses there. What was the cost to actually produce your product if you're a private label seller, or acquire your product if you're a retail arbitrage seller? And then what's the cost of getting it into Amazon so that they can fulfill it for you? Your inbound shipping, whether it's shipping from China or shipping from somewhere outside of London into one of the fulfillment centers in the UK. And then lastly, you've got your other business expenses. So these are the other expenses that are maybe not necessarily related specific to kind of Amazon type issues, but like what about product photography? Or if you have additional warehousing costs, there's all these other costs that people rack up and often forget about or ignore and don't summarize when they're doing their profits calculations. So those are really critical. So you got all your sales information, you've got now all of your expenses information, and then it should be as simple as subtracting your expenses from your sales, and that'll get you your profit. And you could look at your margins in various categories. But I just say, in general, you want to know how much money you're making and what the margins are for each one of your products and the return on investment. So those are kind of the major metrics that I think about, Michael. Unfortunately, doing that yourself is really time consuming and quite challenging. To be personally honest, I wasn't able to get it right myself. I tried for that first 6 months as a seller, and I never really got the numbers all correct because, there's spreadsheets and there's loads of data that's available inside Amazon. Parsing those reports together, unless you're a real data nerd yourself, it can be a big challenge and definitely a big time hack. But that's where the really good stuff lies. That's where you'll get the answers to your business inside of those metrics.
Right. Yeah. And I think you've just reinforced that thing of like why we all obsessed with sales, because Amazon makes it very, very easy to see sales, and being smart business people, they don't make it easy to see all the costs and to add them up in a sort of, simple picture that tells you, hang on a second, this is ridiculously expensive. Amazon's getting rich and I'm not. But
Right.
So let's just going back over that, the 3 buckets of metrics. That's a really helpful way of putting it: sales, expenses, and then other, so overheads, broadly speaking. So including things like product photography. And you're right, people do not take account of that when they do a spreadsheet, to project the profitability or otherwise of a new product. So that's a very good point. Now, coming back to the sales bucket, it's very interesting that you include refunds, returns, and reimbursements within that bucket. Now, yeah. I would think of that as a sort of layperson as that's another expense. So why does that belong in that bucket, and how does that work in your way of seeing the universe?
Sure. Not everyone's going to see it the same way I do. But largely the reason I would include areas like refunds or reimbursements inside of sales is because they're basically offsetting sales. Refunds are essentially negative sales. So you've had a sale, now the product's been refunded. There's going to be some financial transactions. It's almost always a loss for Amazon sellers, unfortunately. But I still consider it part of the sales bucket because it is a negative sale, essentially. And then there's one other that I forgot to include in there, Michael, which is promo rebates. In this era of giving away products to hopefully boost your BSR, you have to consider products that you've given away at a loss. I would also consider those part of the sales bucket.
Okay, well, that's interesting. And that ties in with what my accountant told me a couple of years ago when I went on a mission, which ended up being really a nightmare to try and sort of create my own sort of uber precise accounting system. And she said, yeah, refunds counts as negative sales. So tell us a little bit more. So you've put out these big buckets. So obviously you've been talking to, as you said, 500 sellers, which is a hell of a lot. So yeah. What are the big pain points? Which are the areas that people find the most challenging out of those 3? And what would you say are the biggest areas that people are not aware of that are the biggest dangers? So there's 2 different questions. So let's deal with what are the biggest pain points one first.
Sure. I think you already nailed this one for the audience. I mean, when you said that sales are readily available, everybody's focused on their sales. It's the expenses that get really confusing. And so within the expenses category, first and foremost, it's the Amazon fees that really confuse people. I mean, people realize that if I sell a 25-pound product, that I'm probably paying like 7 to 8 pounds for my FBA fee. But the issue that they don't realize is that depending on how long they've kept inventory in-house, they're going to end up paying long-term storage fees. And depending on how they're integrating their other international marketplaces, if they're selling elsewhere in the European Union or if they're selling in the United States, what's it cost to actually ship your inventory to each one of the fulfillment centers? And then when the goods are received, are there additional charges? If you don't label the product correctly, you'll often get dinged by Amazon. Or I know in the United States, for example, if you choose to send all of your products into one fulfillment center, as opposed to spread loading them across the country, which might be more expensive from your end shipping them, you're going to end up paying an inventory placement service. So it's those recurring fees, those like really pesky Amazon fees that people don't know about, that are hidden deep in the reports inside of Seller Central, that are really throwing maybe newer sellers for a loss. And the more experienced sellers, I find, do know about them, but just kind of ignore them entirely. But if you're anything like me, I'll just share a number from my own personal business. Man, I spent $4,000. I don't sell in the United Kingdom at this time. I only sell in the US. I spent $4,000 in the last 3 months on these recurring fees. So those were inventory charges of various kinds. And if you're not on top of it, it can totally overrun your business. So I'd say that's the primary area, Michael, where I see people really struggling to calculate their expenses.
Makes sense. I mean, it's less easy to calculate. As you said, the FBA, commission is pretty easy to calculate. 15% is something you can do in the back of an envelope. But yeah, inventory charges. I'm starting to think, oh my God, I'm going to go back through my Amazon accounts and find all these hidden fees now. So tell us a bit more about the whole area of refunds as well, because that seems to be something that from my Amazon friends, especially the ones who are, doing pretty big sales numbers. Like one guy I know who's got about, Amazon owes him about $180,000 or something crazy. So
wow.
How does it is very substantial, and that's obviously money that tied up that, for me, that would get a few SKUs going, or, refund, restock some pretty serious sellers. So it's big money relative to, the turnover he's doing, a few $100,000 a month. So how do we deal with that whole area of refunds? Have you got any special tips on that?
I do. I'm really glad you asked about refunds. Especially during the holiday period, I've seen, having spoken with a number of FBA sellers, that refunds have been probably the single biggest area that could be improved for the average seller. For that seller who's trying to take their game to the next level, who really wants to become kind of a 10%er type FBA seller, whether it's smaller revenue or bigger revenue. You're really trying to get serious and hone your skills. Refunds are one big area where you can make improvements, because here's the facts. Returns hurt your rankings. So not only are they costing you money, because the game is set up right now, Amazon definitely has a system in place that benefits the customer more so than the seller. So you're always going to be losing money in the case of a return. But not on top of losing money, you're also hurting your BSR ranking by having a higher return rate. So how can we improve these? So I'd say the mindset that, oh, Amazon returns are going to happen, it's just part of the business and I'm never going to be able to get over it. It's just part of doing business on Amazon. That mindset can be a bit dangerous. I've now seen some sellers who've taken their return rates from 4 to 7% on a given SKU down to less than 1%. So here's kind of how they've done it. The first thing is you've got to track your return rate by SKU or by product over time. That can be kind of challenging to do on your own. Fetcher will do it for you, but regardless, that's something you need to do. And then you need to be communicating with your customers. So an automated email correspondence might be a no-brainer for some sellers who are willing to invest a little bit of money to get a jump send account or something like that, which would do automated email responders. So you're communicating with customers on a regular basis. So you're asking them if there's quality issues. You're asking them, hey, please don't leave a negative review up front. Why don't you contact me and let's see if we can resolve this. And so here's a big thing I'm seeing, Michael. Now sellers, like the more advanced sellers, are reaching out to customers and they're proactively preventing returns, because now customers are saying, oh, wow, this is really nice. That guy from the lighting company, because I sell lighting products, that guy from the lighting company has asked me if I had any concerns and that he'd be willing to resolve the concerns. Well, I do have a concern. There was a quality issue and I'm about to leave a 3-star review and I'm going to refund this product. But no, because I got in front of it by communicating with the customer up front, they reach out to me and I potentially will give them maybe a higher quality product or a free product, just to kind of smooth the surface to prevent not only the negative review, but the return. That is starting to do a tremendous thing in the Amazon world, because I'm starting to see refund rates per customer going down. So that's a big one, just getting in front of things. And then lastly, I'd say go out and get reimbursed for any money that Amazon owes you. So this isn't going to necessarily improve your return rate, but this is an area where you can go and get some money. So when you do get a return, if Amazon is responsible for having lost, damaged, or for having lost or damaged the inventory, they owe you. They have to reimburse you. You should see a reimbursement in your account. But something that a lot of sellers don't realize is that when they lose the inventory, they're often not reimbursing you. You actually have to prompt them. And I'm not kidding. You have to go and download a reimbursements report of all your lost inventory, send it into Amazon, they screen it, and they quickly reimburse you. For me last month, it was like $500 US that they weren't going to pay me if I hadn't prompted them. So Fetcher, we're actually working on an automated tool that's going to do this for you for free inside of Fetcher. But right now, the only solution is to download the report. But those are the two big ones, getting in front of communications with customers to prevent returns, even if it means giving them a free product on the front end.
That's really good. What I love about your thinking is it's very joined up. So you're seeing the connection between what your tool, the Fetcher tool, or indeed any measuring tool gives you,
right,
because of the finances, but you're reverse engineering, okay, what happened in the flow of events and how can I not just catch it before it becomes a return, but actually preempt that. So having the communication in place to try and just prompt them to tell you about problems, not just to think, can you give me a nice positive review or positive feedback for my account, but where's the problem? Please tell me about it. I think that's a very, very smart way of thinking. And I love that joined up thinking. That's exactly, I think, going forward, the way we have to think. And I struggle with joining up all the parts of my business, but
of course,
I love that thinking.